Hey there, and welcome. Today, we're going to strip trading right back to its absolute basics. We're going to break down two of the most important ideas you'll ever need to know, pips and lots. And trust me, by the end of this, you'll see how these two simple things are really the engine behind every single trade. Ready to jump in? Let's do it. So, let me kick things off with this question. What are the two numbers that define every single trade? Now, it might sound like some complex Wall Street secret, but the answer is way, way simpler than you think. And once you get it, you'll have the key to understanding how every single profit or loss is actually calculated. All right, first up, let's meet a tiny but, oh man, a mighty little concept called the pip. Just think of this as the absolute basic unit of measurement for any price change. It's the smallest step a currency can possibly take. So officially, a pip is just the smallest unit of movement in a currency's price. When you hear traders talk about a currency pair moving 50 points, what they're really saying is it moved 50 pips. It's kind of like the universal yardstick that everyone in the market agrees to use.
You know, here's the easiest way to picture it. Imagine the price is literally walking up or down a staircase. Each individual step it takes, that's one pip. It's that single point of movement. So if a price moves, say, 20 pips, it just took 20 steps. See? Simple, right?
Okay, so a pip measures the distance a price has moved. But let's be real, distance alone doesn't pay the bills. The real question is, how much money is that movement worth? Well, for that, we need our second key number, the lot size. This is where you get to decide just how big your trade is going to be.
The lot size is, simply put, the volume, the quantity of currency you're trading. It's the difference between betting $1 on a race versus betting $100. It's the same race, the same movement, but a totally different outcome depending on the size of your bet, right? So let's see what those bet sizes actually look like.
Now check this out. This is where it gets really practical. You can see the common lot sizes here. A standard lot, that's a 1.00, means each pip of movement is worth about 10 bucks. Go down to a mini lot, a 0.10, and now each pip is worth about $1. And then there's the smallest, the micro lot, which is worth just 10 cents per pip. The key takeaway here is that the lot size you pick directly controls the dollar value of every single pip, and you can imagine that has huge consequences for your risk. And that brings us to what might just be the single most important piece of advice in this whole explainer. Beginners should always start with small lots, those 0.01 micro lots. Why? Well, it's simple. Because when you're just learning, a one-pip move against you costs you $1, not $100. It is the absolute best way to manage your risk while you get comfortable. All right, now for the main event. We've met the pip, which measures the movement, and we've met the lot, which sets the value of that movement. So let's put them together and see the super simple formula that calculates the outcome of any trade you make. Okay, here's a little pop quiz for you. Let's say you're trading with a 0.10 lot size, a mini lot, and the price moves 10 pips in your favor. How much is your gain? Think back to that table we just looked at. I'll give you a second. Got it?
So the calculation is just a simple two-step process. Step 1, find your pip value. With the 0.10 lot, we know each pip is worth about $1. Step 2, you just multiply that value by the number of pips the price moved. So that's $1 per pip times 10 pips.
And there's our answer, $10. If the price moved for you, that's a $10 gain. If it moved against you, it's a $10 loss. See? It's just simple multiplication once you understand those two basic parts.
Awesome. You've now seen the fundamental mechanics of how a trade works. So to wrap things up, let's make sure this all sticks with a quick knowledge check on the most important rule for any beginner. First question, what is a pip? That's right, it's the smallest unit of movement in a currency's price. It's that one single step on the staircase.
And the second question, which lot size is the absolute safest for beginners? You got it, it's the 0.01, the micro lot. Always remember that golden rule. Start small to keep your risk small while you're learning.
And I'll leave you with a final thought to chew on. If a price moves 10 pips, is that a big move or a small move? The answer is, well, it depends. It depends on the currency, the time of day, the market conditions, and understanding that context. That's the next step in your trading journey. You've totally mastered the building blocks. Now you're ready to learn how to read the blueprints. Thanks so much for joining me.